Month-end rebalancing flows are said to be behind some of the mild US dollar demand into Monday. The US dollar has been hit hard in January and will welcome a little demand with technical studies so extended. One of the most under-the-radar stories out there amidst all the dollar selling has been the relative outperformance in the Swiss franc, a currency that should have had every benefit of relatively underperforming in the previous week in the face of ongoing SNB activity, US equity market demand, and an ECB outcome that had the market walking away with a more hawkish view. Certainly, the Swiss franc is capable of rallying in times of uncertainty given its safe haven status, and we wonder if there's something more behind the flow, or if it's just a case of so many things that went on to push the SNB's objective for a weaker franc that the SNB was able to preserve its own efforts for a short while and sit back. If this is the case, it would suggest the central bank continues to be quite active overall. Either way, we will watch with interest to see if there may be some distress here that possibly trickles into broader markets. As far as the Monday calendar goes, only US core PCE data stands out, but this alone will be enough to inspire a reaction from the dollar given how important the indicator has been when it comes to assessing inflation. Looking at the week ahead, some of the big ticket calendar events are President Trump's State of the Union address on Tuesday, Wednesday's Fed decision, which will be Yellen's last, and Friday's U.S. employment report. Keep an eye on the pound as well, with the rocketing 2018 performance perhaps running a little too far too fast, especially with Brexit headwinds still out there. Most recently, the Daily Telegraph reported there were discrete discussions for a 3-year Brexit transition instead of the current timeline, which has the transition at just 2 years. That's all for now.